Assalamualaikum warahmatullahi wabarakatuh. Hello, my name is Mico Prayoga from Manajemen Class 22A with NPM 224111026. I will explain a little about the financial ratio analysis. Financial ratio analysis is important in the business world, especially for management, investor, and potential investor. Through this analysis, investor can determine the amount of investment to be invested. Apart from investor, financial ratio is also useful for management itself, because it can be used to assess business development. What are financial ratio? Financial ratio are analytical tools used to measure and evaluate the financial performance of a company. This ratio is calculated based on data contained in financial reports such as balance sheet, profit and loss statement, and cash flow reports. Financial ratio provide important information regarding certain aspects of a company finance, such as profitability, liquidity, efficiency, and solvency. In the world of finance, financial ratio are an important tool for evaluating a company's financial performance and health. This financial ratio is calculated based on the data and components contained in the company financial reports. By using financial ratio, we can assess company performance internally, compare company performance between certain time periods, and make comparison with other companies in the same industry. There are several types of financial ratio that are commonly used. 1. Profitability ratio. This ratio measures the extent to which a company is able to generate profit from its operational activities. Some example of profitability ratio include the net profit to sales ratio, the net profit to asset ratio, and the net profit to equity ratio. 2. Liquidity ratio. This ratio measures a company's ability to meet its short-term obligation. Liquidity ratio involves a comparison of current assets with current liabilities. Examples of liquidity ratio are the current ratio and the quick ratio. Solvency ratio. This ratio shows the company's ability to meet its long-term obligation. Solvency ratio involves a comparison of long-term debt with a company equity or asset. Example of solvency ratio are the debt to equity ratio and the debt to asset ratio. 4. Efficiency ratio. This ratio measures how efficient a company is in using resources to generate revenue. Examples of efficiency ratio include the inventory turnover ratio, account receivable turnover ratio, and asset turnover ratio. Market ratio. This ratio reflects reflect the market evaluation of the company value. Market ratio involves a comparison of share price with earnings per share of equity per share. Example of market ratio are price earning ratio and price book value ratio. By using this financial ratio, companies can gain deeper insight into their financial performance and health. Financial ratio can guide decision making, identify areas of improvement, and help understand a company position in a competitive market. What is financial ratio analysis? Financial ratio analysis is a tool for measuring company performance based on comparative data written in financial reports such as balance sheet, profit and loss report, and cash flow in a certain period. This is usually done by the accountant at the end of the company period of 1 year. The result of the analysis are then reported to management as information guidance for determining company decision or prices in the next period. Financial analysis is also included in the balance scorecard, which is a tool for measuring company performance. How effective the strategies have been used to achieve competitive advantage. This activity is not only aimed at management, but also other parties such as inventor or creditor. For them, financial ratio analysis is a material for assessing how healthy the company is and reserves and investment injection or loan to manage. Financial ratio analysis function. Apart from being a measuring tool for whether a company is healthy, financial ratio analysis has other benefits, namely see company performance trend in a certain period. Material for evaluating company resources, supplier, equipment, production, processes, and even the employees themselves. As a reference for investor in choosing a company. As consideration for creditors. Assess the effectiveness of the company strategy in building competitive advantage. Analysis of the company internal strengths and competitive capabilities with competitors. As a reference material for internal audit of transactions that occur in companies from the financial, operational, or the sector. Determine the reasonable value of profit obtained by the company. Based on the point above, the role of financial report analysis essentially has two roles: as material for consideration and evaluation by both business owner and internal parties such as creditor or investor. Types of financial ratio. Liquidity ratio, a type of financial ratio that measures a company's ability to meet its financial obligation in the short term. 2. Profitability ratio. The profitability ratio shows the company's ability to generate profit. By using this ratio, you can find out the company's survival. There are 5 measures that can be used to measure profitability ratio, namely: 3. Solvency ratio. This ratio aims to measure the level of management of funding source and the company's ability to fulfill its long-term obligation. There are 2 types of solvency ratio, namely: activity ratio. The activity ratio measures how effectively a company utilizes all its resources. In this financial ratio analysis, low activity at a certain level of sales result in greater amounts of excess funds being invested in assets. The extra funds, which have a lower impact on activities, would be better if invested in more productive activities. 5. Investment ratio. The definition of investment ratio is a ratio that measures a company's ability to provide return or reward to funders, especially investors in the capital market within a certain period of time. The purpose of this financial analysis ratio is to have useful value for investors according to the function of financial reports for investors to assess the performance of stock securities in the capital market. Maybe that's all I can explain regarding the financial ratio. Thank you.